Before we get to our legislators, we do want to introduce you to our very special guest today. Again, from the Minnesota Chamber. She and I have been visiting for a little while now, so she's got a lot of great information to share with you. She's the Tax and Fiscal Policy Advisor with the Chamber, Beth Strinden Kadoun. Give her a big warm welcome, please.
Good afternoon. Thank you so much for the invite back. I was here about this time last year. I really appreciate it, and the timing worked out perfect because my nephew is graduating from Fargo Davies, and the graduation party's tonight, so the timing was great. I first wanted to say a few brief description of the Minnesota Chamber, and then I'll give you kind of a really broad session overview and then get into the business community issues that we were working on. The Minnesota Chamber of Commerce is a statewide organization made up of about 2,300 businesses across the state of Minnesota, from those small mom-and-pop stores all the way to the Fortune 500s, basically in all industries and all areas of the state. Our focus is on improving the business climate in Minnesota. And so we work on issues that are important to the business community and how we can advance and improve our business climate, because we want to make sure businesses can start here, grow here, and thrive in the state of Minnesota. Then I want to get into kind of just that 10,000-foot level of the session overview. First, when I was here last year, the political landscape has changed since last year. Obviously, we had an election. For the prior two sessions, we had all one-party control with the governor, House, and Senate under Democrat control and leadership. Since then, we had the election. Obviously, Governor Dayton was reelected. The Senate was not up for reelection, so that remained under the Senate majority control of Democrats. And then the House switched, as our legislators can say, from Democrat control to Republican control. So now we had a divided government in Minnesota. Well, what's the result of a divided government is you have to have bipartisan compromise to get anything passed. And we did see that happen this session. We had all the budget bills passed with the bipartisan support, and not all those were all then passed and sent to the governor, as you heard. The governor did not agree with all the budget bills and ended up vetoing 3 of those, and I'll talk about those in a little bit more in a second. But what you find is bipartisan compromise. The other thing you find with a divided government is you're going to make more incremental changes. You're not going to have kind of broad sweeping policy changes, but more incremental progress, and we saw that as well. This was the budget setting session. So the main goal of the session was to pass the budget. The state's budget starts in July 1st for the next 2 fiscal years of 16-17. So that's an important date to consider when they're looking at a special session, because for those 3 budget bills that were vetoed, if nothing's passed prior to July 1st, you will be in a partial government shutdown. I don't think that will happen. I think they're making some, hopefully, good progress in their discussions right now, but that's an important date to consider, is July 1st. We entered the session with a $1.869 billion surplus. So that was good news when they're looking at setting the budget. That's out of about $40 billion general fund budget. So that was good news. And also the other part of the good news was that looked like more of a long-term structural surplus. In the out years, they were projecting a $3 billion surplus for the state. And then the other good news was revenues are coming in faster than anticipated since the last forecast, which was in February. Revenues are up another $360 million for the state. So we're dealing with a budget surplus. There was obviously a wide variation in opinion on how you deal with that surplus. And so where the governor and Senate and House were on these proposals, like I said, we had a wide variation of their opinions. The governor and the Senate were much more aligned in what they wanted to do with how much they wanted to spend versus how much in tax relief. So the governor and Senate, if you look I'll just step back for a second. The budget surplus is $1.869 billion. Already built into the forecast is a growth of government under current law. The growth of government under current law, I think, is about $1.8 billion, about 4%. Is already forecasted to increase for spending. The surplus is on top of that growth. So what the governor was proposing is he wanted to spend basically all the surplus. The governor was proposing about a 9% increase in government spending over the previous biennium of about $3.5 billion. The Senate was pretty close to the governor. They were at about a $3 billion increase in spending from one biennium to the next. The House Republicans had a much different opinion on that. Their budgets were passed with a 1.7% increase of $650 million. So much smaller. Where the House Republicans decided to do is they wanted to provide more money in tax relief. So they were proposing $2 billion in tax relief. Much different from the governor and the Senate, where the governor had about $180 million for tax relief, and the Senate was at about $150 million for tax relief. I would mention with the governor's proposal, he actually still had 0 for business tax reductions in his proposal, and he actually had $45 million in tax increases on businesses in his proposal. So that was troubling to see, where the governor didn't want to at least see some improvement in the business tax climate for the state. So what was the final budget deals that were negotiated? Obviously, they were negotiated between the House and Senate. The governor felt left out on a few of the bills, which is, I think, why you saw some of the vetoes that came forward. But the final budget deal that was struck was $41.5 billion in total general fund spending. That was a little over 5% growth in spending of over $2.2 billion. So I think you saw the Republicans obviously move up from their $650 million to $2.2 billion in new spending, and obviously saw the Democrats move down. So you saw a bipartisan compromise as the budget was presented. On the tax side, I'll get in now to kind of where we wanted to see for our business climate and priorities we wanted to advance. Like I said, what we really focus on is improving that business climate in the state. And when you look at the business climate, you really look at a few key items. The business climate is obviously made up of infrastructure needs as well as our cost, the business taxes and regulatory burdens. Those are kind of the two main parts of our business climate. Minnesota ranks pretty well when you look at our infrastructure. Our workforce, we tend to rank very high. Our quality of life indexes, we would rank very high. But where we rank and we feel we need to make a lot more progress is also on our tax side or the cost side of the equation. Unfortunately, that's where we rank amongst the worst in the nation with some of the highest tax rates in the nation. We rank 49th worst on the Small Business and Entrepreneurship Index. We rank 47th worst on the Tax Foundation that looks at just the business tax cost. And so those are areas that we hear from our business community that the high tax burdens really do kind of impede their growth in the state. And that was our top priority, was to see if we could improve that business tax climate for the state. So what we focused on for the business taxes is about 4 main items. One was we wanted to reduce the tax on pass-through entities. Pass-through businesses are those businesses that pay their taxes through the individual income tax. That's your S-corps, your LLCs, your sole proprietors. Those are really that growing segment of our business community. That's true not only in Minnesota but nationwide as well. Currently, they employ 56% of the private sector is employed in pass-through entities. So it's very important to make sure we're competitive on the pass-through entity side. Right now, when we had that tax increase in 2013 session where we raised that individual income tax rate to 9.85%, we now rank 4th highest in the nation on the individual income tax, but that means we rank 4th highest in the nation on pass-through businesses. For pass-through entities, when they're taxed, that's taxed on their profit, but that's a lot of the money that they would be rolling back into their business. They call it phantom income. They're paying taxes on it, but they actually never receive it because they typically use it to reinvest in their employees, capital equipment, etc. So that was one of our goals, to lower that tax. We had good bipartisan authors. Unfortunately, did not make it into either of the House or Senate bills. And I think the reason was they really decided to focus on something they thought they could have broader bipartisan agreement on, and that was hopefully reducing the business property tax, which is another tax where we were also, one of our goals was to reduce that tax. For the business property tax is another tax that unfortunately in Minnesota puts a pretty hefty business on our business community. We rank 2nd highest in the nation in rural Minnesota on the business property tax, 4th highest in the nation on the metro area. We rank a little better when you look at industrial properties because we don't have a personal property tax. Some other states do, so we're about 11th highest in that tax. So that's a fixed cost of doing business in the state. And it's one where our goal was to reduce the statewide business property tax levy. Realize for Minnesota businesses, they don't not only pay all their property taxes to the local governments for the schools, cities, counties, just like every other business or every other property tax owner. They also pay a portion to the state as goes into the general fund. It's about $840 million. So that's the tax we were focused on lowering. We want to remove the automatic inflator as well as hopefully lower some of that overall tax. The statewide levy is about 30% of any business property taxes in the state. So if we would lower that, that would really help our competitiveness on that fixed cost of doing business in the state. The good news on that one, it was carried in both the House and Senate bills as it was in tax committee. So we did have bipartisan support for that. The other piece that we wanted to improve was on the research and development tax credit. Minnesota was the first state to enact that of all the states in 1981. Other states have now surpassed Minnesota, and we thought if we enhance that a little bit, it really does help innovation in the state and those good R&D jobs. The fourth tax we wanted to work on was the estate tax. Minnesota is one of 14 states that still have an estate tax. Most states have done away with it. Minnesota's estate tax threshold is being phased into $2 million. So of the 14 states that still have an estate tax, our estate tax is much lower than most other states. Many states are now going to the federal level of those 14 states of $5.4 million. So that was our goal, at least to get to that federal level, because what we hear from CPAs, attorneys, and others, and small businesses and farmers is that's a really detrimental impact on them when they want to pass along their business to the next generation, and also when they're looking at their retirement years and where they might want to retire to. The tipping point seems to be that estate tax. And so if we get to that federal level, we think that would be really beneficial for the state as a whole. So those were the ones that we were working on. The estate tax was just carried in the House bill. The R&D was in both bills. The business property tax was in both bills. What happened to the tax bill? At this point, it's still sitting there to be taken up in 2016 session. So they could not come to a final agreement on the tax bill or the transportation bill, and I'll talk about the transportation bill in a second. So those are items you can still weigh in. If it's important to you, you can talk to your legislators and help us advance that cause on reducing those business taxes in the state of Minnesota. The next item I wanted to highlight was on the transportation. Taxes and transportation with the budget were kind of the key items that people were talking about at the start of the session. The agreement was, and everybody seemed to agree, and we did too as a business community, that everybody wanted to put some more increased investment in transportation. It's a key infrastructure need. We saw the need to put more dollars into it. So everybody was agreeing on that, but they couldn't agree on how to fund it. The business community's perspective was that we have a surplus, that there's dollars there that we can use for transportation. If transportation is a priority, then it should get some general fund dollars. 33 other states do use some general fund dollars to fund roads and bridges. Minnesota does not. So that was our viewpoint. Put some more money into increased infrastructure for our transportation, but we did not support increasing taxes to provide for increased transportation funding. The governor and the Senate, their proposal was to have $11 billion in new transportation funding over the next 10 years. How they proposed to fund it was through enacting a wholesale tax on gasoline, which would basically then allow, as the price of gasoline increases, the tax would go up. As the price decreases, the tax would go down. As the current price of gasoline is, that would be about a 16-cent increase in the gas tax. Currently, Minnesota's tax is 28.5 cents. We would be much, much higher than our neighboring states. We would be among the highest in the nation if that gas tax increase went in. I think you can probably talk to some businesses that are here today, especially those border communities. That can be a really big cost to them, but as well as really make it hard to compete with those bordering states. So the Senate or the House Republicans, their proposal was $7 billion over the next 10 years. How they proposed to fund it was through using there's currently collected sales tax on automobile parts and supplies. They would dedicate that to transportation, so it would come out of the general fund and go to transportation. I think the amount of that was about $300 million annually, so that would have been one of the new revenue sources to fund transportation. Like I said, that did not pass this session either, so that's another debate that will continue and likely, we hope, be concluded and decided in the 2016 session, because we all agree we do want to put some more money into the transportation, but it's really how you fund it. So the next item I want to talk about was the K-12 bill as well. This is one where this was passed, once again, with strong bipartisan support to the governor. The governor vetoed it. We thought there were some really good provisions in it. We were supportive of hoping this would be signed into law and hope some of these provisions can continue. They had some good provisions that would help on licensing of teachers to make sure more teachers, especially those teachers who have licenses out of state, have a more quick path to get licensed in Minnesota. This was vetoed over the universal 4-year-old program. Dayton insisted, the governor insisted that that would be part of the final package, is why he said he vetoed the bill. And that, excuse me, I'm losing my voice. And that's why it was vetoed. The bill I would just mention it was $17 billion for the budget. Is it the K-12 bill, the largest part of general fund spending? The bill did include a lot of increased funding for per pupil on the formula. It had a 1.5% increase in the first year, 2% in the second year. Governor Dayton, in his original budget, only had a 1% increase in that formula, so it went above what the governor was asking. It also did provide some targeted resources for early childhood education, but it did not have his 4-year-old universal pre-K in the schools. I would mention that did not receive the support of the Senate or the House or the superintendents or the school boards. So I think Governor Dayton has a little bit of work to do to get that support if he wants that in the final package. Another item I did want to mention of something that did pass, workers' comp, was something that's been worked on for 13 years, is how we can control one of the fastest growth areas of that cost is on the health care side. They did come to agreement finally with the business community, unions, hospitals, to agree on some cost controls for those health care payments. So that did pass and was signed into law, so we did make progress on that item. We also had some progress on the higher education, on making sure there's some more apprenticeships on those, getting those hard, skilled trades in those hard-to-fill jobs. We have more of a pipeline there. So, and that bill was signed into law as well. So there are some good things. I have a handout on our other priorities. I think for the time frame, I don't want to go over my time. So if you have any specific questions on those items, I'm happy to talk about those after. You can contact our policy expertise in that area as well. The final issue I did want to mention dealt with, I think what we saw, is I saw very troubling, is kind of that anti-business rhetoric that we saw at the session. We saw that in Governor Dayton's veto message of the K-12 bill as well. And in his K-12 veto message, he basically said that Republicans are putting forth benefits to corporations and millionaires over funding kids. And so what seems to be pitted is businesses against kids, kind of if you're for any sort of business tax relief or improving the competitiveness of our businesses and you're supporting those policies, that now you're pitted against kids and you're anti-kids. I don't think that's the case. We obviously want to be strong on our infrastructure, our workforce, supporting our public schools. But just because you're supporting some business tax relief to be more competitive does not mean that you're anti-kids, nor should it be kind of business bashing. So anything we can do to kind of help explain that, businesses they're our employers. We need to make sure we have a good, strong business climate. We want to make sure that these businesses can grow in the state, earn a welcome into the state, and if we can kind of modify and put aside some of that corporate bashing that we were seeing, I think that would be very beneficial. So with that, I'll end with a slogan that I think David Olson, our former president, always would say, is you can't be pro-jobs and anti-business. And so hopefully we can help with that messaging as well. So thank you very much.